We have Mayuresh Joshi of William O'Neill join in. Mayuresh, the market at the index level is getting extremely narrow. Now, it's all about individual stocks, right? And individual stocks have been moving 10, 15, 20% in a span of a week. So give us some new ideas. What's fresh on your, on your radar?
Afternoon, Surabhi. So again, I think we are focusing primarily in terms of where earnings stability and earnings growth might continue happening at a decent pace. And therefore, I think selectively within BFSI, over the past few weeks, we've obviously added leadership stocks like ICICI Bank onto our domestic as well as our global portfolios. But I think within the broader markets itself, I think 3 or 4 ideas. One, I think healthcare as a space and within healthcare hospitals as a space is still showing signs of relative strength, and the expectations largely getting baked in is that the earnings momentum that has continued into Q4 might very well continue into the next few quarters. And therefore, I think stocks like the Krishna Institute of Medical Sciences, where the numbers have been decent so far, or even an Apollo Hospital out of the leadership names, where our own expectations is the kind of bed additions that can happen over the next few quarters in an asset-light mode will probably not add much leverage to the balance sheet. And at the same time, with operating leverage kicking in, as more hospitals mature, the average revenue per operating bed, the key number in terms of the average length of stay, and key areas that they're probably operating out of should actually start playing out quite positively. Again, within pharma, our own sense is that Strides Pharma in the broader markets has reported a decent set of numbers. The guidance that they've probably given is very encouraging. US sales itself expected to be around 400 million odd. They reported 293 million for the year gone by. And therefore, I think the massive growth that can come through with 10 or 12 ANDAs expected to get launched, the nasal spray, which is expected to get launched with the US FDA as well, can be huge enablers for the US business. The other regulated markets also expected to do reasonably well. The ratings, rankings, the earnings profile as we see it for both these spaces continue to be growing in a very robust fashion. The third space that we're probably looking and which we have looked into and selectively adding more names has been the agrochemical stroke fertilizer space. And within this, again, I think names like Coromandel is something we continue holding onto our portfolios. But Deepak Fertilizer is one new name which we're probably looking at. Obviously, I think the leadership position that Deepak has in technical ammonium nitrate, in diluted and concentrated nitric acid, where it holds leadership position in South Asia, Southeast Asia, and the capacities that they're probably adding both in TAN as well as the nitric acid capacity with backward integration. I think the numbers over the next few quarters can be relatively stable and strong as well. I think that is where I think we're looking out for areas where earnings momentum and earnings trajectory can remain strong. So I think a few sectors and a few ideations within those is what we are like.
In the agrochemical space, have you looked at this company called Bayer Crop Science? I think it's a German MNC company. Came out with numbers yesterday. The stock skyrocketed about 12%. It's predominantly owned by the promoters. About 72% is held by the promoters. But they do have some FI and DIA holding. Any thoughts on Bayer if you've looked at it?
Absolutely. So again, I think same space as I just said. I think good set of numbers. In fact, very good set of numbers by Bayer. And again, I think the logic and the rationale remains the same. The expectation with better monsoons, which have already started across the length and breadth of our country, I think is expected to be very, very positive as the monsoon season progresses. And therefore, I think the Kharif season should be extremely well laid out. The farm gate prices, as we have been doing our channel checks, suggest are firming up as we speak. And at the same time, input costs have remained relatively benign. So the expectation in terms of input costs remaining benign might very well continue, including the likes of phosphoric acid, ammonia, potash to a large extent. And therefore, I think the basket of raw materials being relatively lower might mean EBITDA margin expansions happen onto the balance sheet. Obviously, we've been also hearing in terms of how government incentives can probably play out in terms of the subsidy payouts. And because of the DBT transfers that are probably happening over the last few years, the working capital cycle has probably got reduced for most balance sheets within this space itself. Return ratios remain strong, balance sheet remains extremely strong, and the kicker outside the monsoon is obviously going to be the next Rabi season, which might be equally good. So I think we're probably looking at a base case scenario Well, next few quarters, volume-led price growth might actually play out on numbers. And therefore, I think what numbers Bayer has probably put out might actually continue. And as a space, I think we're generally optimistic looking at ratings, rankings, and institutional holding that presents.
Mayuresh, y'all were quite positive, I think, on the pipe space. Now, this one has the tailwind because of the orders they get from the United States. And FY26 in all probability should be better than FY25 because there were no orders from the United States. Any view on this name?
Rigel, I think as a clear compliance disclaimer, we continue holding these stocks in our domestic and global portfolios. And you're absolutely right. I think the expectations in terms of more orders coming their way from the US market as far as more capex is expected out of the Permian Basin is something to be watched out for. And it can be a key player because of the subsidy that it runs out from the US as well. At the same time, if you probably look at the Middle East, the expectations in terms of orders from Saudi Aramco, specifically in the Saudi market, can be substantial ones as well. And the existing order book that they're probably having might cater to the execution there over the next few quarters as well. When it comes to the domestic market itself, the expectations in terms of both pipelines being laid, both for the CGD network as well as for waste and water management network, the expectation largely is that another 12 to 14,000 kilometers of pipes will need to get added over the next few quarters and years. And therefore, I think Corp having leadership in this parts of the market might actually do well. From a balance sheet construct, again, I think reasonably placed as we speak. And therefore, I think the opportunities that present itself, both domestically and globally, make us believe that earnings should come out very, very reasonably for this counter over the next few quarters. So, yeah, I think we continue holding this stock, as I said, and probably remain optimistic. Let's see how the numbers probably play out.
Apollo Micro, Mayuresh, have you had a look at it? In 2 days, the stock has surged close to about 26%. This is a company which grew, I think, 51% last year. And the company is talking about a revenue CAGR of 45 to 50% over the next 2 years. That's some solid growth. And plus, they won that big export order today. Analyze this company?
Sorry, Rima. It's out of our coverage area. So
out of your coverage. Okay. What about Schneider Electric? Big move today.
No, so decent set of numbers. And again, I think it's an absolute proxy in terms of expectations of the infra/stroke manufacturing story for India. And therefore, I think as numbers are playing out and as numbers are expected to be, our own sense is that it shall be a top-down outperformance that can probably come through. Now, the only risk for this company as we see it is, I think input cost inflation starts going higher. And that probably takes a little bit of a toll in terms of how the operating performance will be, specifically in terms of absolute EBITDA and the margin numbers as well. And second, I think execution. I think if they're not able to execute in terms of market expectations, in terms of revenue growth, in terms of margin performance, somewhere I think the outperformance that the stock has probably delivered because of lesser execution capabilities, if that probably comes through, I think that just might play out on the price. Apart from these two, our own sense is that as a base case scenario, I think there are sufficient tailwinds in terms of what opportunities the industry has to probably offer. And they've probably got the expertise to probably deliver. So again, I think rating rankings look absolutely spectacular as we see it. And therefore, anybody holding can hold on. These are the only two risk factors which we will be continuously monitoring for this stock under consensus.
Okay. All right, Mayuresh. Thanks very much for all that analysis. Just give us a minute, we'll recap the day, and it's been a quiet day.
Mayuresh, your thoughts just coming in on the markets. We're seeing a bit of an underperformance coming in from the FMCG side. Obviously, we'll talk about ITC in a bit about in terms of the details there. But other than that, FMCG, when do you think, you would start looking at these other names?
Right.
Yeah.
No, so two things. One, I think the entire expectation in terms of consumption coming back very, very strongly for a whole host of reasons, including the tax cuts that have come through in the budget, where urban consumption was lagging, is expected to come back strongly. And with better monsoons, rural consumption expected to come back strongly as well. I think the base case scenario being made out is that the second half, earnings should show a significant amount of reprieve, specifically for the FMCG sector, which has clearly been lagging because of all these factors put together. And that has played out in terms of tepid volumes, that has played out in terms of pricing, and that has played out in terms of input costs being relatively higher and margins not being able to pass on. Now, the expectation is that volume should recover, pricing should come back. Whatever modifications they have done in terms of SKUs, either by reducing grammage or to a certain extent tweaking prices for certain SKUs as well, I think that should probably come back to normalcy. And therefore, I think within the consumption basket, FMCG, as you asked me, should show strong signs of revival. I think within the pack, I think Marico is something which has posted a decent set of numbers. The commentary has been strong as well. And all these tailwinds should effectively pay out for the entire sector. But for Marico, our own sense is that earnings should probably remain extremely stable. And within the alcohol beverage space, something like a Radico Kheta, our own sense is that the premiumization story continues. Price hikes expected across states, input cost expected to remain benign. And because of the entire operating leverage scenario getting played out, numbers should be relatively stronger for the alcohol beverage space and Radico in particular. So I think these are a couple of names within the broader FMCG theme of the consumption basket that we're lacking.
What a wealth creator Radico Khaitan has been 25 times in the last 10 years, Mayuresh, and for Marico,